Morning, Seafried with the morning grain comments. Markets are lower overnight. We're still taking premium out of the soybean market because of the bearish USDA report. Talk about maybe China taking less U.S. beans than last year, and that maybe U.S. farmers in 2022 will plant more beans than corn due to the high cost of planting corn. Some people look at China taking a total of 103 million tons of U.S. beans, world beans versus 98 last year, but only 30 from the U.S. Versus 35 in Brazil, 65 versus 57. So key to that could be South American weather after the first of the year. We did note that one private group came out with a crop yield of 51.3 in the U.S. versus, and it's higher than the government. Their crop number is now 44.36 million bushels versus the government's 43.74. We note that Matif, Canada rapeseed, all making new highs. Malaysian palm oil also making new contract and life of contract highs. Over in the corn, USDA said 29% of the crop is harvested. And again here, China might take 27 million tons of corn versus 31 last year, but maybe only 14 from the U.S. versus 22 and 12 from Ukraine versus 8 last year. Matif corn prices continue to trade higher because of the slow harvest. France corn harvest only 2% down versus 31 average, and that private group did bring their corn yield down 1 bushel from their previous estimate, but they're still higher than the average trade guess, I think, still looking at a 15 billion bushel crop, equal to what the USDA has been saying. We also note that we think that the world corn prices will trend higher, and the key will be the final corn yield as far as where prices go. In the wheat, 47% of the U.S. winter wheat crop is planted. At Kansas at 42, Missouri at 6, and Washington State at 77. Matif wheat futures make a new high. Europe's export numbers are probably coming down. We're probably also looking at 1 million tons less U.S. supply, and the Russian exports might be down 3 to 4 million metric tons. So in October, the USDA could show record low world exporter stocks with usage ratio, and some of the supply down as much as 8 to 9 million metric tons. We also note that the Russians, are trying to ship as much wheat as they can out before the quota system kicks in and before the imported increase in export tax. Short-term negative to the wheat market, long-term bullish. So again, a lot of data out there for the market to digest. Still looking at concern about inflation. Still looking at uncertainty about the U.S. debt ceiling and if they're going to pass a stimulus package and the impact that might have on the dollar. We're also looking at crude oil near some pretty strong resistance. The threat of higher demand has got us almost to this $80 a barrel level, but if the supply doesn't really drop that much or actually increases, crude oil might see a little bit of a correction on the downside. Still looking for a cold winter and dry spring and summer in the U.S. next year.